Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into our YouTube channel for our weekly video analysis. If you like this video, please give us a thumbs up and consider subscribing. So today we're going to start off with SPY. It is in a clear and steady uptrend. QQQ is in an uptrend, but it's a little bit more volatile than SPY, but that's normal. We'll look at that too. Small caps, IJR, it's going for a triangle breakout. And then we're going to look at a technique for trading the swing within the pattern using the CARS ETF, CARZ, as well as the BETS ETF, BETZ. And finally, we've got IGN, the networking ETF, going for a breakout. So we're going to start off with SPY because this is my main barometer for the overall market, and it remains in a steady uptrend. And the pullbacks since we had that big lift off there in November have been relatively mild. You can see here, there's the 50-day moving average. And whenever you touch that 50-day moving average, and even when you broke below it, that was an opportunity, not a threat here. And as far as defining the overall trend, I've got this trend composite indicator down in the lower window there. And that is part of the Trend Investor Pro Indicator Edge plugin. And there you can see that icon for plugins where you can see all the plugins that are available. And this is basically an indicator that aggregates the signals in 5 trend following indicators. And so if we pull back on this chart, get a longer look back, you can see there around July 20th, it first turned positive. And so it has been bullish ever since. And this is the indicator I use to kind of give my bias as far as I want to be looking for bullish setups, pullbacks within an uptrend when the trend composite is bullish, net positive, and I want to be either out of the market or looking for bearish setups when the trend composite is negative. And this next indicator is the momentum composite, and it aggregates overbought and oversold signals in 5 momentum indicators. And so you can see here in the latter part of October, you got 4 of them with oversold signals. And then you can see here, I'll put on the pointer so you can see that a little better. There on the 3rd or the 4th of March, we had 3 of those indicators with oversold signals and below the 50-day, and we got a bounce. And then we had another trio of oversold indications there on May 12th and got a bounce. So if you look at SPY now, it's in the middle of a trend. It's just in a tight range, hugging that 50-day moving average and working its way higher. And I see nothing negative on this chart right now. Now, if we look at QQQ, we can see a different picture, but still an uptrend here. So here is the trend composite indicator. And if I scroll back, we can see that it turned bullish a lot earlier than the S&P 500 there in mid-April. And then we look at the momentum composite. Haven't had many oversold opportunities. We had 2 oversold signals there in September, October. We had 3 oversold signals there in late February, early March. And then here in May, we had some oversold signals. So oversold tells you to be on alert for a potential bounce, to turn to the price chart and look for a bullish setup. Now, if you look at this uptrend, it's different than SPY. It's more volatile because you can see we get these dips that go well below the 50-day moving average. And so clearly you're breaking the 50-day. But even a break below the 50-day moving average is an opportunity, not a threat when the bigger trend is up. So if you look at QQQ here, it just has a more volatile advance with deeper dips along the way. And right now we had a dip, and now we've got a rebound in play, and that rebound is in play, I would suggest, as long as we hold that 330. If we break the 50-day again, that'll give us the next opportunity, yes, but it would suggest that would be an early break, and so we might have to wait for another setup to materialize here. But QQQ is still in an uptrend. Now here is IJR, and I prefer IJR over IWM because I think it is a little bit stronger if you compare the two charts. And I'm going to shrink this just a little bit here. We can see the trend composite is bullish, and all 5 indicators are bullish. And this one has been net bullish since August. So when this is bullish, we want to look for oversold conditions to signal a pullback and an opportunity to partake in that uptrend. Now, we didn't really get oversold until we had 3 indicators becoming oversold there in the second week of May. But if we look at the price chart for IWM, we can see a triangle consolidation forming. So we've basically been going nowhere, moving above and below the 50-day moving average. But this is a consolidation within an uptrend as far as I'm concerned, because it's a rest. And that is typical after a big move up. I mean, look at the advance we've had since the latter part of October, from 70 to 115 or so. That is a huge advance, 40+%, and you're entitled to a rest. And that's what this looks like we're having, is a consolidation, and IJR is breaking out of that triangle consolidation as we speak. So here's the main analysis page at trendinvestorpro.com, and we've got a combination of free and paid articles. And there you can see a free article on cars as it breaks out of a big consolidation pattern that's been going on for a few months, just like IJR that I showed before. But what I want to point out is what I wrote about in the May 20th commentary for trendinvestorpro.com. I was looking at 4 charts that look the same. And this is the way I do it. I group the charts according to the patterns at work. And so we had cars, we had iDrive, we had Drive. Those are the 3 automobile ETFs, a lot of EVs, electronic vehicles in there, and then bets, which of course is the betting and esports ETF. But all of them had these big advances from late October into February, March, and then consolidations. So these blue zones mark the consolidations. And a consolidation within an uptrend is typically a rest within that uptrend or a bullish continuation pattern. And what I do is I look at the swing within the pattern to try and get the jump on the breakout, because you have to ask yourself, do I want to be taking a breakout within that pattern, or do I want to wait for a break to 52-week highs? Now, a break to 52-week highs is, of course, bullish, but you don't get the same reward to risk ratio. And so what I identified here is, here's that downswing within the pattern. We're coming to a support zone, and I identified this little resistance level, and we broke out, and now we're breaking out to new highs. And that's an example of how to get a jump on a bigger pattern. And all 4 of these reversed their downswings within their patterns, but cars is leading because it has a new 52-week high. And also for subscribers, I did put out a video on trading the swing within the pattern that details how I like to do this. And I also use the cybersecurity ETF in the example. So here's the cars ETF on stock charts ACCP. And there you can see that big move and then this big consolidation. And now we're breaking out of that consolidation and hitting a 52-week high. And you can also see here that there's what some people would call a support break. But I pretty much ignore support breaks when you're that far above the 200-day and when the trend composite is all bullish, all 5 signals. And we should have been looking for opportunities below the 50-day instead of considering it a negative. And sure enough, we held support here and we broke back above the 50-day. And that was a nice little short-term signal. And now we've got a longer-term signal with that breakout there. So another one that caught my eye is IGN, the networking ETF. And it is shown here with the trend composite turning bullish there in the second week of November. It was a bit of a laggard until then, but played a little bit of a catch up there. And the thing about the trend composite is it's designed to absorb a correction within the bigger uptrend and hopefully not turn bearish on just a pullback or a consolidation. It's not perfect. No indicator is perfect, but it does help me stay on the right side of the bigger trend. And so I think the bigger trend is up. And so we've had a big move, and then we get a consolidation. And so this is like a triangle consolidation. And a consolidation within an uptrend is typically a bullish continuation pattern. I don't know how many times I've said that, but I prefer to play the continuation move over the reversal move because the odds do favor continuation over reversal, especially with regards to uptrends. So if we look at this here, you can see this consolidation here, and we're breaking out, and it looks like IGN is headed for a new high. So if you'd like to know more about trendinvestorpro.com, you can click on the link in the description below. If you like this video, please give us a thumbs up and consider subscribing. Thanks again for tuning in, and I'll talk to you again next week. Have a great day.